Southwest Airlines stock, a turbulent journey. Folks, let's talk about Southwest Airlines. This stock has been on a wild ride. Back in 2021, we saw a huge bounce. But since then, it's been nothing but turbulence. The stock took a nosedive faster than a plane hitting an air pocket. We're talking about a serious decline here, people, but here's the thing. This isn't just about Southwest. The entire airline industry has been struggling. Before you hit that eject button, we need to look at the bigger picture. This industry is known for its ups and downs, and that's where Elliott Wave Theory comes in. Airline industry challenges navigating choppy skies. Let's face it, the airline industry isn't for the faint of heart. You've got fuel prices bouncing around like a ping pong ball. 1 minute they're up, the next they're down, then there's the competition. Everyone's fighting for a piece of the pie, and that pie isn't getting any bigger. You've got legacy carriers, low-cost airlines, and even new startups all vying for your travel dollars. The airline industry is more regulated than a nuclear power plant, and don't even get me started on the weather. Elliott Wave Theory, riding the market waves. This theory is a fascinating way to understand the stock market's ups and downs. Now let's get to the good stuff. Elliott Wave Theory. It's a method that traders and analysts use to predict future market movements. Developed by Ralph Nelson Elliott back in the 1930s, this theory is like a crystal ball for the stock market. Elliott believed that market prices unfold in specific patterns. It's all about understanding market cycles and investor psychology. By recognizing these cycles, traders can make more informed decisions. Elliott noticed that markets move in repetitive patterns, or waves. These waves are not random, but follow a predictable structure. We're talking 5 waves in the direction of the main trend, followed by 3 corrective waves. This sequence helps in identifying the market's direction. It's like a dance. 2 steps forward, 1 step back. This dance of waves helps traders anticipate market corrections. These waves aren't just random squiggles on a chart. They have a specific order and meaning. They're a reflection of human behavior. The collective actions of investors create these patterns. You've got waves of optimism followed by waves of pessimism. This ebb and flow is what drives the market. And the best part? These patterns repeat at different scales. Whether you're looking at a daily chart or a yearly one, the waves are there. Once you start seeing these patterns, you can't unsee them. They become a crucial tool in your trading arsenal, helping you navigate the market waves with confidence. Section 4, Crowd Psychology and Emergent Behavior in Markets. Now let's talk about crowd psychology. The stock market isn't just a bunch of numbers, it's a living, breathing organism. And like any organism, it exhibits emergent behavior. Think about it like this. When you're in a crowd at a football game, you might suddenly find yourself doing the wave. That's emergent behavior, folks. And the same thing happens in the stock market. You've got millions of investors, all making individual decisions, but when you zoom out, patterns start to emerge. This emergent behavior is what creates those Elliott waves we talked about earlier. Section 5, Practical Trading Tips, Support Levels and Bullish Setups. In this section, we will dive deep into the practical aspects of trading, focusing on how to identify and utilize support levels and bullish setups to maximize your trading potential. All right, folks, let's get down to brass tacks. It's time to translate theory into practice. How can we use all this fancy theory to make some cold, hard cash? It's time for some practical tips. These tips will help you navigate the market with confidence and precision. First up, let's talk about support levels. These are crucial in determining the potential floor price of a stock. These are like the floor of your house. They provide a base that the stock price tends to bounce off. For Southwest Airlines, we're looking at a key support level around $28. This level has historically acted as a strong support. If the stock holds above this level, we might be in for a bullish setup. This means the stock has a good chance of moving higher. Now let's talk about bullish setups. These setups indicate potential upward movement in stock prices. We're looking for a pattern called an impulse wave. This pattern is characterized by strong upward movements followed by smaller downward corrections. If we see this pattern forming, it could be time to buckle up for a wild ride to the upside. This is where the real excitement begins. But remember, folks, timing is everything. Entering and exiting trades at the right time can make all the difference in your trading success. Section 6. Building a robust trading system. Elliott Wave and Fibonacci pinball. Now let's put it all together. We've learned the theories and we've seen the charts. We're not just looking to make a quick buck here. We're aiming for sustainable long-term success. We're building a robust trading system, one that can withstand market volatility and still come out on top. That's where Elliott Wave Theory and Fibonacci pinball come in. They are the backbone of our strategy. Elliott Wave gives us the big picture. It helps us understand the overall market direction. But Fibonacci pinball, that's our GPS. It provides precise entry and exit points. It helps us navigate each twist and turn along the way. Every market move becomes clearer. We use Fibonacci ratios to project potential turning points within each wave. These projections are crucial. These Fibonacci levels act like magnets for the price. They attract and repel, guiding our trades. But here's the most important part, folks. Understanding these levels can make or break your strategy. This system isn't just about making money, it's about managing risk. Proper risk management ensures longevity in trading.